Mortgage rates for homebuyers are changing next month. Those with higher credit scores may pay higher fees, while those with lower scores could pay less. So what will that mean for first-time homebuyers? This is so confusing. So here to explain is financial coach Dr. Lynn Richardson. Welcome back to the show. It's great to have you. Help us make sense of this. I mean, if you have a higher credit score, why are you getting a higher fee?
Well, first of all, this is what I absolutely love. Still, homeownership is the foundation for building wealth. What's happening now is that the federal government wants to make it possible for everybody to afford buying a home. So they're decreasing the fees for those with lower income and increasing fees for those with higher credit scores. So it's lower income that's getting the benefit and higher credit scores that are paying a little bit more.
Okay, got it. And we were talking a little bit about, is now a good time to buy a home? Should you wait? Are interest rates coming down? You say it's always good to buy a home.
It's always a good time to buy a home that you can afford for the budget that you have. Because even if the interest rate is 7%, the interest rate on your rent comparably is thousands, you know, basically. You don't get any equity when you rent. And actually, for many people right now, it's harder to rent than it is to buy. So considering buying a home is still always a good idea.
But maybe don't depend on these rates coming down in the next couple of years.
Don't depend on them. If you get a good house right now, if the rates go down, then you can refinance and free up some cash flow.
Okay.
But now is still a good time to look.
Okay, let's move on to a different sector. That's layoffs. Disney, Amazon, The Gap, all these companies are cutting positions. It's part of their restructuring efforts. What advice do you have to workers who have been laid off?
First of all, go and apply for everything. Unemployment insurance, make sure you go and get access to all of your benefits. Go to the doctor, get your teeth cleaned, get your eyes checked, do everything, okay? Because they'll typically keep you on for a month or so. Next, start a home-based business. Now is the time to make sure, especially if you're getting less money, that you can get your money back. And when you have a home-based business, you can now write off things like business meals, trips that you're going to take, and so on. And then lastly, I would say strongly consider some contract work or some freelance work. Contract and freelance work is independent contractor. Technically, it's a home-based business, but you don't get tax write-offs just because you say you have a home-based business. You actually have to live your life like a business, document things, and actually participate in that business with the intent to make a profit.
Yeah, you have so many helpful tips for so many people. You're a money coach, you're hearing concerns, you're getting a gauge on the economy and what people are thinking, what they're worried about. What is the biggest concern you hear from your clients, and what advice do you give them?
Well, the biggest concern is everybody wants more money. That really is it. And I understand because I was living check to Monday, right? I've been there, done that. But the truth is more money doesn't solve a money problem. Our job is to do the better thing with the money that we have. So I say live by the 10-10-30-50. The first 10% give, the next 10% save, 30% for incidentals, and 50% for bills. And still work on the other things until you see a change.
Yeah, this is like so important, and especially now. We were talking to a money expert earlier, and he said savings, and it sounds so simple, but it's not really that simple for people who are living paycheck to paycheck.
And here's the other thing about savings, because a lot of people will say, well, pay off your debt first because you want to do that and then you want to save. Well, not right now. You want an emergency fund. So you may have to eliminate some things. You may have to eliminate some of those benefits that you had. I took my kids in 2008 for that recession. I took them out of the paying school and put them in the free school. I took them out of the paid dance class and put them in the free dance class at church. You know, I took them out of everything that I had to pay for and put them in comparable activities. The key word is free 99.
If it's a difference between investing in a house and equity or investing in a savings pot, which one do you recommend?
Investing in a house with equity, because the equity is going to grow faster than the savings.
That is your savings.
Yeah.
All right. Thank you so much. Appreciate your advice always. And if you liked Lynn's advice, check out her book. It's called The Symphony, A Guide to Creating and Balancing Multiple Streams of Income, and it's out now. Appreciate you being here.
Thank you.